following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more into the breach, dear friends, do we go. And of course, as we start the show off, we always like to check out just a little bit of what's happening in the S&P. At least volume is much better than yesterday. 2.14 billion shares as we start the day. 1990. Up 12 points on the S&P cash. And everything shows that at least option market makers and market participants on Wall Street suspect that we're going probably another 20 or 30 points higher by expiration on Friday. We could get more depending on how many people continue to short this market. But again, as we've talked about since Monday and even last week, I didn't see anything other than a market that was range bound, that was due to break out to higher prices, and in this case, probably start squeezing and running some squeezes. We're going to talk about that today and many other things. And before we get started with that, if you're new to the show, and I know we get new listeners all the time here at TFNN, you may have not heard something that I did a little while ago, but we're going to play it now, hopefully. If the engineers are ready to go, maybe they can hit an X on the keyboard and let me know that they are all set up and ready to go. Are you ready? Nothing. Bueller. Nothing. There they go. Okay, go. I'm ready.
Hey, China's yelling, you got to let me know. Gonna raise or let it go. You say zero rates are mine. Is it QE for all time? So you got to let me know. 'Cause the minutes do not show. It's always ease. Grabbing bears are on their knees. One day it's blue sky and it's black. So if you want me off your back, well come on and let me know. 'Cause employment's gonna blow. Gonna raise or let it go now. Gonna raise or let it go now. Race, there will be trouble. And if you don't, it will be double. So come on and let me know. Disinflation bugging me. You want money to be free. There are bubbles everywhere. Do you really even care? So come on and let me know. Don't blame it on the snow.
And that's it, my parody to Janet Yellen. We've got other things going on because the market probably going to be kind of quiet into the announcement tomorrow. We'll do the Janet Yellen purr before the end of the show today. And, of course, as always, we like to start off the show with just a little bit of history.
And it's all just a little bit of history repeating.
Today, in 1908, William Crapo Durant The nation's leading maker of wooden wagons and buggies incorporates the General Motors Corporation. Durant knows that if GM succeeds, it will put his current industry out of business, and he goes ahead anyway. GM will serve as a holding company for the stock of Durant's Buick Motor Company, the biggest motor car producer in the country, and will ultimately encompass dozens of other automakers and related companies. On this day in 1908, and he took one of the first lessons of innovation, and that is, if you don't eat your own lunch, someone else will. So hats off to Mr. Crapo. You think with all that money he would have changed his middle name. Anyway, just a thought, just random thoughts out here that keep flying through my mind on a day like this. Again, volume's good, markets are up. As far as I can tell, probably going to see this thing. I would suspect we're probably going to touch 2,000 on the S&P cash on the open tomorrow. If I was hallucinating a open for tomorrow, maybe that's it. Maybe we touch it before the end of the day. But my guess would be that we open up somewhere around 2,000, and then we pull back, at about 10 o'clock, and we sit around twiddling our thumbs till 2 o'clock, and the announcement comes out. So there's not going to be a great deal to do out here, but I think that the way this market is set up is it wants to give every chance for Janet to blink before the announcement. But again, we'll talk about it later. But options say that at least the people around expiration for Friday are massively believing that she will not raise. I think that we're starting to see that in not only the crude market, which we talked about Monday, where the Chinese were starting to refill their strategic petroleum reserve, but just in gold today with its little bounce. I don't think so far it hasn't done anything that makes me think that anything's truly happened in gold out here. 1.5%, pretty nice pop. About 5% on lots of the miners, but we brought that up earlier in the week that a lot of them didn't look too bad. They're in this lower trading range out here and either building up energy to break out higher or lower, and I can't tell which one. So I'm sitting back on the gold bandwagon. As I've said for the last few weeks, I'm agnostic on gold. Other things going on out here as we have time to talk about it. I wanted to talk more about short squeezes because I think a lot of people are confused, and maybe even people that have been around the market for a long time have forgotten. And that's the only thing I can think of. They've forgotten what happens even in bear markets. But a lot of these stocks that are massively, massively short. In fact, did I bring something up here? Did I put it up? Did I have it up? Did I delete it? I think I deleted it. Oh, no, there it is. I had a little link. Let's do this real quick. I just wanted to show this page before I get into it. But there's a web page that has all kinds of short interest on it. Pilgrim Pride, 65% short interest. World Acceptance Corporation, 51%. King Digital, 50%. Mankind, 48%. Solar City, 48%. Why I think Solar City is a dog of a company? I can't short it with 48% of the shares short. Anyway, we'll go back into a lot of these, but once you get down in probably the 10 to 25% short interest rates, you see a lot of stocks that are actually have a tendency to squeeze when markets go up fairly significantly. A lot of times these stocks with 50% short interest, there's a reason for it. They do have huge problems. But what I'm saying and did say pretty much since the beginning of the week is that I'm expecting some short squeezes on some of these stocks. And there's a couple ways you can do it if you're a stock operator and you're manipulating stocks, which is actually legal to the extent that I'm going to talk about today. But first is generally an easy one, and it happens almost every options expiration cycle per month, and that is the false news. Wonderful discussions about pie-in-the-sky devices. Man, someone get me a cigarette. Anyway, one is the false news, and this takes the shape of upgrades and phony rumors of buyouts. And my guess is that come in Friday morning, if everything does not go to hell in a handbasket, we're going to see a variety of all these upgrades, phony buyout rumors, mergers, all kinds of wild stuff, because it certainly looks like option market makers would at least like to put these stocks up and mark them up into Friday's close. The second one is a little bit more insidious, and maybe one that, if you're not been around the markets for a long time, is a absolute killer to short stocks, people short stocks, and that is the ability to move your, if you're long a stock, out of a margin account into a non-margin account. Most people forget about the ability, because this is what doesn't tend to make the news ever. And that is, you get a stock that's 50% short, and let's say that 20% of the shares of the company are owned by a handful of people, let's say the executives, and everybody's shorting stocks. So they'll make sure that their shares are in an account that allows them to be lent. Therefore, they're going to get a little cash back on it. Most of the time they will, if they have enough shares. They'll get a little taste of that cash. But what happens is they don't like everybody shorting their stock. And, of course, they're the CEO. They don't want to get fired. So what do? They take all their shares and they call up the CFO and the chief information officer and, somebody that's big on Wall Street. And what do? They move all their shares out of those wonderful margin accounts and into the non-margin account. And guess what happens? Suddenly, you're short this stock. Maybe it was short 25% or 20%. But guess what? You get a day or two to get out of that stock. They have to return those shares. And it's one of the easiest ways, especially for insiders, to jack up the price, at least temporarily, of their stock, and at the expense of shorts. So look at a few different ways. In fact, there's more than this, but I'm going to say that 90% of the short squeezes are put together by one of these three methods out here: phony upgrades, false rumors, probably spread by the company themselves and/or people that are long the stock that want to start a squeeze. It can be inside the company, it can be outside the company, but we'll talk about some pie-in-the-sky stuff today. You tend to see these things and the upgrades horrifically coming out, the last day or two before options expiration. And I always think that there's, I can't prove it, but I have to get my little aluminum foil hat on and think that there aren't some phone calls or people meeting for dinner going, it'd be a real horrible thing if there was an upgrade tomorrow because there's a lot of people short. Maybe you should come out and say that your margins are going up tomorrow. Anyway, we'll be back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crisp crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Just a short comment. They were out pushing the Hyperloop today. And very interesting to see Elon Musk with all his pie in the sky ideas. A couple of them will probably pay off. I suspect this is one that will not. We already looked down here in Florida at just putting a regular elevated train together, and it would have broke the economy of Florida when everything was going well in the 2000s, much less today. In fact, some areas around where we're at, they were going to do about 200 or 250 miles. Some areas were going to be $70 to $120 million per mile. And you add that up, and of course, if you go by the big dig up there in Boston, you got to figure that if it's $70 to $120 million a mile or something, that's probably going to end up being $500 million a mile. And that was an elevated train between Miami, Orlando, and Tampa. But the idea that you're going to be building these giant things and shoving them down tubes, especially in California where they have earthquakes, is very interesting. And the reason I brought that up is they've been talking about using it for freight, high-speed freight, which is kind of interesting. More interesting to me, though, is they're talking about actually putting people in this and running it at 500 or 600 miles an hour. Well, good on you. The problem is I got my pilot's license, and my dad was a jet pilot. And I know a lot of people, and if you had an earthquake, If it didn't break the tube in front of you, if it did, they're going to be washing you out with a hose. There's no way you're going from 600 miles an hour to 0 miles an hour in probably, 50 feet if the tube breaks. There just isn't a lot of safety factor. If anything could happen to the tube, if they put it above ground, then someone could drive a truck into it. If you put it below ground, it maybe $1 billion a mile. It's hard for me, even if the technology works, to understand how this makes a great deal of sense economically ever. But I've been proven wrong on other things. I suspect that I will not on this one, because if it doesn't make sense at 100 miles an hour, it probably doesn't make sense at 500 miles an hour. But just a thought. And like I said, a lot of times you get into this silly season of expiration and you see all kinds of pie in the sky ideas out here. Just one more pie in the sky idea from Elon Musk. I suspect 5 years down the road, 3 out of the 4 of these things are going to be gone, and he's no longer going to be the fair-haired boy of California when they figure out all this stuff is nuts. The same kind of thing on the same kind of reason, well, with Los Angeles County buying Teslas as cop cars. I can just hear it now. Well, we'd like to send a car to you, but it's got to be charged for the next 4 hours. For a county that's basically broke, trying to be all good and whippy and politically correct, probably not a real smart idea. I would worry about getting all your ducks in order in case there's even the hint of a recession because you're going down the tubes. And even California lost almost 350,000 people last year to Texas, and I think another 250,000 to Florida as people escape super high taxes. The idea that all these wonderful things are going to change your life probably will. They just have to be economically feasible. If they're not, you put the burden of that on your constituents. And of course, do I have it here? Where did I put it? There it is. How much time we got? Oh, we got plenty of time. I just wanted to get this. It's one of my random thoughts of the day, and then we're going to get into charts in the second half of the day. But I don't know if you saw it, but apparently an Italian doctor is ready to do the first head transplant for somebody. And being a aficionado of movies, especially bad ones, I had to think of a movie called The Man with Two Heads. If you've never heard of it, I think it was 1972 or 3. And it was a big football player, Rosie Greer, also along with a movie star that had made all kinds of Academy Award-winning movies, but he was down on his luck. He was also a horrible racist and had to be put on it. But if you haven't ever seen this movie, quite the hoot fest of a head transplant, actually one on another person. All right. Interesting. We're going to actually get to market stuff now, market content stuff. You can send me and email me at Path.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're back. Anyway, wanted to start looking at some stocks, real market kind of stuff. And of course, today we've got Federal Express down. I saw a very interesting blurb come through at about 6 o'clock last night, maybe a little earlier. And they were talking about just being able to go up about 5% on all their package shipments. And of course, earnings numbers are out, but no one's liking them. When we look at FedEx out here, it missed its EPS by 4 cents. Revenues were in line, lowered its guidance for the year, but raised its prices. I don't know what that tells you. Fuel costs are down. That's got to be a big part of what FedEx does. But why are they guiding down? Didn't have time to look at it. What I can tell you, though, is pretty huge volume in FedEx. And the question is, was all this movement up here, what was that all about? Are, shipments from Amazon, that kind of stuff, starting to wane also? That's my first thought when I see a chart like that. So I want to go out here and check Amazon. No real movement out here for Amazon. Rather flat out here. Like a lot of the bigger stocks, really no movement. Light volume today and higher, but that's probably not uncommon. Just take a quick look at UPS and see what they have. Not a lot of movement in United Parcel either. So maybe just something that has to do with FedEx itself. it's not higher, not dramatically lower. But especially with United Parcel, you could probably make a case that this was in an ABC down. When we look at the retracements out here, you see that this actually went right to the confluence area. I wouldn't have probably made a trade on this confluence area. Let me clean this up here a little bit better so you can see. Confluence came in at about 100 to about 101. I would have liked to seen that maybe 50 or 70 cents to put a trade on, but it probably gave you a good indication of exactly what was going on. You had a pretty big three-gap play in this to the downside, where basically yesterday filled the second one. I would probably think that this could make it to this third one, and that third one happened on, what was that, the 20th? Yeah, the 20th of August. Down on 3.8 million shares. What do we have at 5.2 million shares yesterday, and light volume today 1.88. But when these confluence areas are fairly big like this, more than a percent and a half, I tend to think them more as congestion zones than places where I'd actually physically put a trade. I'll start looking for other places. If you thought this was making a bottom, which I think it would be tough to do, this did have a higher volume low at $93.64 on August 26th with 5.8 million shares. I think you could probably make a pretty good case that this thing would come back.
The Name Your Price tool gives you policy options based on your budget, so you finally get a say. It'd be weird if you didn't get a say, right? Wait, if I'm just thinking this, can anyone hear me?
Giving you a...
Where is this coming from? Anyway, what else do we have going on here? Ghosts in the machine. Anyway. No, that was actually from Edge. The Edge browser did that to me today. Why it waited for 5 minutes and then kicked out an ad was kind of interesting. Anyway, other things are going on out here. United Parcel Service in that congestion zone, so I don't know what else you can say about it other than that. What else? Poster is a clear. Oh, somebody sent me the poster. I'll see if I can get this thing up. He didn't send me a link. I can't open it up in a browser. They transplanted a white bigot's head on a soul brother's body. That's right. What a great movie. Oh, I love it. Especially when people are actually talking about nutty stuff like transplanting somebody's head onto another body. Anyway, like I said, a lot of insane stuff going on. Wanted to look at Buffalo Wild Wings real quickly. And we've been kind of checking in on this one from day to day. And not a lot of movement in this one either. Again, I can't buy anything up here at the top. But if we're talking about confluence areas, it make a lot more sense to buy something like this. I see it at that 170 to 173 level, 172 level on Buffalo Wild Wings. So it'd have to come back pretty much to that level. You also have a gap almost at that same price point. That's where you start putting multiple things together to figure out where you would have support if you were going to want to buy something on the way up. Let's see what else we have out here for things. Baidu, we were starting to talk earlier this week and last week about how some of these stocks in China had started to look like maybe they'd found at least some sort of bottom. And we talked about a few of them. And some of them popped over the last few days. Baidu actually up about 5% today, I think. Yeah, up to 149.06 earlier. What do we have now? 149.45 is the high today so far. But, 3 million shares, is that a great deal? Not a huge day in these. I mean, yesterday you had 4.4 million shares, but it's not going down. I guess it's probably the big thing. My guess is that if these stocks are going lower, that you've got some consolidation to do before they're going to build up some steam and blow out the lows. Talked about FDX. What else do we have out here? Yandex, YNDX. up very strongly. Now, if you're also talking about even just bounces in a bear market, Yandex, which is the Russian, this is the Russian stock, isn't it? Let me make sure to make sure. Yeah, internet search engine in Russia. This one actually does not look bad if you were playing it just for bounce. I probably wouldn't buy any Russian stocks, but I won't buy Chinese stocks either, so that's not it. But guess what? This is one of the more beautiful stocks if you want to see how Confluence sets up. And this sets up at 17 to 17 bucks. That's exactly what you're looking for. A 17-cent range from Confluence. If you're using the October 31st high as the first input, the second input would be the April 23rd high at 21.23, and then the focus number would be your low here on August 24th. But if you were playing some of these for a bounce, and this thing did come off the bottom with some volume just 2 days ago. What was the volume on this thing? 12 million shares. So we got a little higher. Now, even in a bear market, this could get to 17 bucks. And off of a $9 stock or $10 stock, that's still a 70% run. I like this for a variety of reasons, but this is one of the best looking Confluence charts. I'm not talking about volume yet, although volume is fairly good. But if you were and had some kind of fundamental reason for thinking this thing would bounce, this is one of the better looking ones at 17 bucks. Of course, the cart is the horse is out of the barn, or the cow's out of the barn. Well, my mixed metaphors don't really do it justice, but this is exactly what you're kind of looking for out here in a Confluence level setup, and that is just a super fine, in this case, 17-cent move. If you're new to Confluence numbers, especially coming off highs like we have, these are going to be very important. One of the reasons I didn't play gold stocks was that there were a lot of these Confluence numbers just slightly higher, so the risk reward wasn't there for me to know that there was going to probably be a lot of sellers just a little higher. Even if gold's going to 1,800 bucks, I don't know that yet, and that would mean that the upside was probably limited. But, you know, we see some short squeezes in gold stocks. Probably going to see short squeezes in things like these Russian stocks too. But pretty interesting to take a look at that today and figure out what's going on. What else do we have? SLW. I think we talked about this earlier on Monday too. That was very interesting out here at the lows, that it had broken the lows and really didn't have that volume. Had a nice consolidation, kind of dipped down a little lower, but you were really looking for something in the neighborhood of 10 million shares, like you had on the down day of, what was that, June 20th. On that day, which was, what was that? Yeah, June 20th. But it's popped back into the trading range of that day. Even on the 24th of June, you had 9.1 million shares. Up today with 4.5 million shares so far, 4.6. And again, the problem is you're going to start seeing congestion somewhere between 13 bucks and 14.50. And that could tell you a great deal. Of course, that's probably pretty close to the August 20th high. And that means that you probably have a good chance that you're looking at some kind of trading range between $14.28 and $11.03. Probably more like $12.07, though. If this has popped back into the trading range, that pretty much means a false breakdown. But even there, you got about a $2 trading range in a $12 stock. 20%, 15%, something like that. It's not all that bad. Pay fold. This was a one that deserves the Price is Right horn, if we can find it. Where's my little Price is Right horn? Oh, there it is. Amicus Therapeutics down fairly strong today. Let's see what the deal is on this. Just downgraded. Not a lot of volume back up here. Actually got up to the previous highs up here on, what is that, the August the 5th. That had 1.9 million shares, saw 2.3, 2.4 million shares just on the 14th. So, a little pullback out here, but energy was good on the way up. Volume was good on the high. My guess is this is going to take another round at the $18.83 high from August 5th. So we'll take a look at that. Do we have anything else? I'm going to see on my list of stuff. Gold Corp. Let's take a look at some of these gold stocks while we're talking about them. We were talking about this, I guess, yesterday or the day before, about how the volume came in at lows. I would have liked to seen the volume really, or the energy off that August 21st high back down to this September low, actually come back a little bit more than it did. It did come down, and that's actually a good positive. But I think we were pointing out this July 24th low at $12.35, where it was spiked by just 12 million shares on September 11th, went sideways for 3 days. Now it popped up. Now here's today where you want to start seeing that sign of strength. Volume is going to be better than yesterday, but I would like to see something in the neighborhood of 12 million shares. Our 7.4 million shares today says that maybe this is a bounce for the FOMC meeting and not a bounce for anything more. And I wish, because not a bad-looking chart. Wish this would have done it a couple of weeks ago before the FOMC meeting. I would have felt a lot better and not blazing some trails out here. Of stocks moving higher, as we talked earlier in the show and on Monday, I started seeing rumors and discussions and prices in shipping that suggested that the Chinese were actually starting to buy crude again. I think that's starting to move a lot of these commodities on the thought that if they're buying crude, they'll buy other things. I don't see any evidence of that other than crude so far. Synovus Energy had a nice pop out here today. They're just kind of catching up. A lot of these stocks are out here. Let's take a quick look at Halliburton. I don't see anything really much more than $50 in crude, but I do think we made a low. And I'm very happy this week because, of course, what else did we have? We had less than $2 gas, and I filled up. So I'm a winner already this week. What else do we have out here? Oh, you found a link. I'll show it here when we come back from the next break. We also have to...
He's got money coming out of the wazoo.
Clicked on the wrong button, sorry. Wanted to talk about the Fed. Wanted to talk to some other one. Oh, we got to get the Janet Yellen prayer in. I almost forgot.
For our Janet, who art in finance, hallowed be the Yellen. Thy auctions come, thy bills be done, in twos as they are in sevens. Give us this day our daily fed, and forgive us our treasuries, as we forgive those that default against us. And lead us not into recession, and deliver us from deflation. For thine is the borrowing, the easing, and the printing, forever and ever and ever. Amen.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. This coming Tuesday, September 22nd, Tom O'Brien will publish the 700th issue of his weekly newsletter, The Gold Report. It's amazing to think that Tom started his newsletter over 13 years ago when gold was trading under $300 an ounce. To celebrate the 700th issue, you can sign up right now at a 20% savings off the regular monthly price, and you can lock in that low rate for as long as you remain a subscriber. The Gold Report is Tom's weekly newsletter covering the gold market as well as a variety of gold mining equities. The Gold Report is published every Tuesday afternoon with a market update sent out to subscribers on Monday mornings. Tom will walk you through what's going on in the gold and metals market each week, as well as providing specific buy and sell recommendation on the mining equities themselves. Now is the perfect time to sign up for the Gold Report. The 700th issue is published Tuesday, and that's when this sale ends, so act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're looking at options expiration, of course, on Friday. The option market makers are extremely bullish going into Friday. Right now, the SPYs show about 205 would be exactly where they would love for these to expire. Now, in the last couple of days of option expiration, you're not going to get generally, you're not going to get the whole thing. But that shows you the bias on this. Now, the bias is up to 205, so let's just split the difference. So what are we, 6 points, let's say 3 points higher by Friday's close. That would probably be pretty typical, if not 4 points, something like that, on the SPYs themselves. And I suspect we could get that. One of the reasons is that option market makers have not blinked this week. They have not gotten light. They haven't decided to run. They have made, I guess, a conscious decision that they will not raise now. I suspect that what will come out of the meeting tomorrow is that they will say that they will raise probably next month, and they're going to give us yet another 30 days to think about it. And at that point, it'll be it. If we actually look at options into October, they actually show a slight down bias. So I could see that a lot of people have gotten short. We get a nice little squeeze over the next little while. Maybe we make it into the end of September, into window dressing, and then we start seeing maybe a little bit of a pullback. I don't think that we're racing back up to 2100 or anything like that. I do think that we've moved into a new kind of market. That market is going to be one of picking stocks and not indexes. The indexes will bounce up and down rather wildly, while the big money is probably going to be in individual stocks and sectors. One of the things that also makes me think that we're going to have higher prices come Friday are things like the options on Apple. Apple is got one of these chart patterns out here right now that shows a very high chance that, and it's about 80%, that Apple will expire at 117.50 on Friday. Both the forward month, which is the one that expires tomorrow, and the mid-month, which is October, that expires mid-October, are both exactly saying the exact same thing. And of course, a nice V pattern out there gives you a good indication that at least in options and option market makers, they are highly confident that the stock price will be probably between 117 and 118 by the close of the day on Friday, barring some kind of astronomical news. If we look at other stocks out here, probably going to see a similar thing. Google, when we look at it, you know, it's actually a little higher, but kind of a lot of shares out here. So Google maybe could move down a little bit. There's a few of these out here. But when you really is interesting to me is that when you look at Google's options for next month, they're really looking for this stock to start moving higher across that. So there's a few things going on out here that are giving me some clues. Again, if you've listened to the show for any length of time, I spend a lot of time in options expiration and looking and seeing what the option market makers tell us. They tend to be the best traders on Wall Street, and they're going to be right 8 out of 10 times. So you're going to have a fairly compelling reason for me to abandon my long positions. Like I said earlier, I think we'll probably touch 2,000 in the morning, probably pull off that, and then we're going to start seeing a lot of quiet until the FOMC meeting. If we get a surprise, I'll be surprised. And then we're going to go into expiration on Friday. So a lot of good trading yet to come this week. Hang on for the Tom O'Brien Show. In the meantime, so when you can, not when you have to. We'll see you here tomorrow. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.